The stock market tumbled this week. Starting last Friday, I believe it was Monday and Tuesday, it went down significantly, and that's pretty much all you heard about. That was what I would call, and we all call, the micro as opposed to the macro. The micro is what's happening right now versus when you zoom out. Thanks for watching. This is what I call The Dollar is Dead. We run this every Monday, Wednesday, Friday. We discuss ways to get out of debt in the current interest rate environment, as well as the fact that with inflation, the dollar loses value, 99% of its value over the last 100 years, while assets, that's what the rich buy, go up in value. Things like gold, or silver, or stocks, or real estate, anything other than the dollar. That's the point of this show, to help you realize over time that just keeping dollars and growing the amount of dollars you have in the bank, you're losing purchasing power. It's becoming worth less and less. But assets are going up in value, and that's how wealthy become wealthier. The banks don't care about you. Look at this. Wells Fargo, Bank of America, both having issues with Zelle, and they're being investigated. They haven't been reimbursing, I believe, some of the individuals for fraudulent transfers. I'm not sure about all of the details, but there's an issue there. The banks have to always, it seems, be forced to do the right thing. You see banks paying fines all the time because they don't want to do the right thing. They have to be made to do the right thing. The government, they don't care about you. Now, some people tell me, yeah, the government cares about us. Really? Well, let me know when your taxes go down significantly so that you can keep the money that you worked so hard for. When that happens, then I'll say the government cares about you. But until that happens, they don't. They just want your money. So the point of this show every Friday is that we go through a basket of goods to show that you don't have to just hold on to dollars. Of course, it's great to have your emergency fund and make sure you have money for your bills. But when you're talking about long-term investing, things like the stock market go up over time. They do have dips. It looks like we're in a recession. That's what I believe. We could get worse, and we could potentially go into a depression. But by diversifying your investments, or sometimes going to cash, whatever that may be, I'm going to show you what I've been tracking since February. I always have to say, informational purposes only. I'm just trying to make a point. This isn't financial advice. I'm not a financial advisor. The point is, I don't hold on to just dollars. I try to diversify. Sometimes when certain stocks go down, other ones go up. Or when we have inflation, things like gold go up. And some of these things do the opposite of one another. That's the idea of diversification. If one sector is going down, maybe another's going up. So if you spread your money out and you need to access some of that cash, maybe, God forbid, there's a medical emergency in your family and insurance doesn't cover it all, and all of a sudden you have a huge bill and you have to go sell some things. Well, if you happen to have everything invested in the same asset class and that's down at the time, you're going to be forced to sell when your asset value is down. But if you have diversification of things that move in opposite directions of one another, when you need to access that money, the asset class that's down, you don't touch it. The asset class that's up, you can sell part of it. That's the point. So take a look here because we're going to go through everything we look at. We've been looking at it since February because I'm trying to point out that you don't need to freak out on the daily. But if you look at it over a long period of time and you diversify and dollar cost average, meaning invest a little every month, over time, things will go up in value. Now, next week, there's the CPI data, the PPI data, I believe inflation data. Of course, we have potential wars going on throughout the world. Things are all volatile. The market's always volatile, but this is making it worse. And then we have the elections coming up. But take a look at last February's data versus this week's data. Once a month, we update savings, CD, and treasury because I get it from this government resource. You can see the savings rate is still about the same, 0.45. 3-month CD, 1.5. 3-month treasury, 5.4. Okay. Why do we care about that? Well, look down at the bottom, you'll see inflation at around 3%. So you're barely beating inflation. In other words, your money's not growing or becoming more valuable over time by just sitting on those dollars. And savings, CD, and treasury is essentially sitting on dollars. So let's look at what if you put some money into gold, silver, Bitcoin, Ethereum. Look at the gold price. It was $2,000 at the beginning of the year. Now it's $2,431. That's $400 increase on $2,000. That's significant. That's a 20% gain. That's as if your $1,000 in your bank account became $1,200, which it didn't, but that's what it would be like. Silver, $22.88. Now it's $27.47. It's a $5 gain on $22. That's significant. Bitcoin. People talk about Bitcoin's crashing, it's crashing. Well, it was 43,000 in February. Now it's over 59,000. Still, even with recent drops. Ethereum, $22.99. Now it's $25.90. I always say I look at those two because those are the two largest cap crypto, whether you believe in crypto or not. I happen to. I have another channel that just talks about crypto. Bitcoin's completely different than everything else, but Ethereum is the largest market cap of what they call altcoins. Now look at the Dow Jones. The Dow Jones is 30 stocks. What people usually talk about when they say the market's going up or down, they're usually referring to those 30 that are a barometer for the entire market. This week it went down significantly. It was all over the news. However, since February, it's still higher. February was just over 38,000. Now it's still over 39,000. The S&P 500 was a little less than 5,000. Now it's 5,300. The S&P 500, the Dow Jones, you can buy index funds. The S&P 500 over time, look at this chart and the returns over time. That's right. Over time, the S&P 500, like an ETF, has been shown to be one of the most stable investments, giving you a decent return with very low risk. Of course, there are years and times when it goes down and times it goes up. That's why dollar cost averaging is so important, which just means, hey, if you're used to $100 being taken out of your account every month to pay for Netflix or Hulu or your cell phone or whatever it may be, why can't you have $100 come out every month and go into an investment account, an ETF, a savings account, wherever it may be, buying some gold, buying some silver? You can do that with ETFs. Very easy, very liquid, very fast. I've made videos on it. You can go back and look. But if you're used to just having money come out to pay all those bills, why don't you have money coming out for your future? Think about that. I think it's important. Then we said inflation's around 3%. Unemployment's been going up. I think we get new inflation numbers next week. We just got the new unemployment numbers. The 2-year and the 10-year treasury, you can see here, the 2-year is 4.032. The 10-year is 3.935. For the first time in a while, they're very close to re-inverting. Right now, they're inverted, meaning the 2-year has a higher rate than the 10-year, which shouldn't be the case. That usually reflects the fact that we're in a recession or going into a recession. So, what is my point here? This week has been very volatile. But zooming out and looking at these commodities over a long period of time, odds are they gain value and they go up and to the right, even though they are volatile as they go, whereas the dollar just goes down. That's my point. Think, as they say, outside of the box and realize that the truly wealthy don't sit there with bank accounts full of dollars. They have assets, they have real estate, they have gold, they have silver, they have stocks, whatever it may be, but they're not sitting on dollars because they know what no one wants to tell you, and that is because of things like inflation, dollar loses its value. Thanks for watching. I hope this is helpful. Please do subscribe so you see these every week, and I give videos, many videos, on creative ways of helping you get out of debt, and we have calculators specifically to help you determine what will work best for you. And please do hit that like button. It really helps the channel out. Have a great day.